Join us. Welcome to MetroIBA's Education Webinar Series. We're glad you could take time out of your busy holiday schedule to join us today and work on your own business. Before we get started, just a few logistics. If you can hear me okay, could somebody please text chat in if they're watching the webinar on the Click Webinar application? If you can text chat in that you can hear me okay. Thanks, Tricia. So glad to hear that. Okay. While we're doing the webinar, if you have questions, please text chat those in. We'll also have hopefully some time for Q&A at the end. If you're listening on a phone line, I believe there's a request you can do to unmute yourself. I'll check that out and text that out as well while we're going along. I'm not sure I remember exactly what code that is at the moment. And I'd also like to thank Venture Academy. They are our hosts for our webinar series. And we're joined by Margaret Holland this morning. Margaret, could you say a few words about Venture Academy?
Sure. Venture Academy is a 6 through 12 public charter school, and our mission is entrepreneurship. And we love being able to host these webinars.
Thank you. And with that, we'll get started with Phyllis Burdette in Business Owners 2017 Year-End Tax Planning. We're really excited to have Phyllis along. She is an expert in this field and a small business, focuses on small business taxes planning. We're very proud to have her here today. And I'm just going to give you a very short intro so we can spend more time with Phyllis. So thank you, Phyllis, and take it away.
Thank you, Jill, for having me here today. I'm always interested in giving advice to small businesses and using some of my years of experience to help them in very practical ways. Today we're just going to focus primarily on some year-end tax planning. It may be helpful to me if you could just maybe send a text and just say, what type of business you're in, if there's one or two things you're more interested in. And then I can address some of the particulars to you on that. So again, just text just a little message, like if you're a floral arranger or if you own a cafe. That's just what I need to know. We look like we have someone in education, and
I know we have someone in remodeling.
All right. Looks like anybody that joins new, if you want to just text us briefly what type of business you're in, it will help me direct some of my comments to your business specifically. Well, let's get started, and we can kind of come back to the comments later on, too. Again, welcome to the Business Owners Year-End Tax Planning Schedule. My name is Phyllis Burdette. I'm a CPA. I've been in business since, I've had my own practice since 1988, so it's been at it a long time. And I primarily focus on small to mid-sized businesses. We provide a variety of services, and when people get a little beyond where they can do their own tax returns, we do taxes and accounting to help businesses. So there's my information, our website. Got the time wrong on our date, but I think the slides will be available later too.
Yes, they will.
One thing I like to emphasize to business owners is to do some of your planning before December 31st. It gives you some time to, during this holiday season, we're busy with a lot of other things, but it gives you some time to possibly talk with your accountant or a tax preparer if you have any questions about taxes, accounting, that type of thing. We really like to meet with our business clients and our individual tax clients before December 31st, because there's some things we can do this year that may not be around next year, for one thing. So I just advise people to take some action. You don't have to maybe get everything ready because we're still finishing up December business. But, make sure that you might have your books up to date. because if you've only got a month or two worth of accounting to catch up on, it makes it so much easier to get your tax returns done instead of waiting till February or March. And then we say, why now? Why should you get started now? Well, for one thing, again, we got some significant tax changes coming that may affect your business that you should be aware of. And then the other thing is, if you have some deductions or anything that you plan to pay for this year, you've got to do it before December 31st and have some kind of documentation that you have actually either written a check and mailed it, or for a bill, or that you put something on a credit card that you plan to use. So that's kind of why now. If you do this, January 5th when you're back from skiing, it's a little more difficult. It's all over by then. And then I guess the thing we talk about is, how do I get started? I'll talk a little bit about what type of books you need too, but I moved this slide in here because people talk about their books and records, and for many small businesses, they're not corporations, they're not real big businesses. They may have a simple set of books, but one thing that I want you to be aware of, whether you're a Schedule C, which means you're including your business activities in with your individual tax return, or if you're a corporation or a partnership, you really need to have a full set of books. We have many companies, and they are fairly substantial, who still file a Schedule C. I have a large retail company, for instance, and all that is required on a Schedule C is that you present them with a profit and loss statement. But under audit, the IRS or the state of Minnesota or whoever's looking at your books and records would sure want a balance sheet from you. So be sure when you're talking with your accountant, make sure that there's a way that if you're not doing real formal type bookkeeping right now, that there's a way to prepare a balance sheet for your company. That would include your cash accounts, checking accounts, credit card liabilities, if you're charging things on credit cards. It also could include inventory, or it could include accounts receivable, a variety of things that really don't hit your P&L. So I want you to be aware of that more for the Schedule C people. Typically, by the time people become incorporated, by then they've got to getting a little more serious about their business and have switched over to some kind of a bookkeeping or accounting system. If you're just doing manual records, however, item 2 there is, if you've got some manual work papers, that could be something from just possibly keeping track of all the checks you've written. It could be your check register. It could be something like keeping track of your sales. You might have a spreadsheet or something, whether you're doing it by hand or in Excel, where you're showing your sales, your gross sales, your sales tax collected. Maybe you want to keep track of shipping costs. So that can be done manually or just using Excel again, without really getting into a formal set of, using accounting software. And the information that we use for most of our small businesses is the information from the bank accounts for all 12 months and your credit card statements. We like to review those, make sure everything's in order. There are a few computer accounting systems that small businesses use, and some of you may be familiar with those. One would be a QuickBooks product. They have a desktop version, and we are using QuickBooks Online right now for many of our clients. It's been interesting working with that. We can download a lot of transactions and do things that maybe we didn't do before. There's other products out there. We run across them. Sage Accounting has a nice product. Again, we just emphasize QuickBooks, Wave, Xero. So anytime you're out on the internet, you'll see all kinds of small business accounting systems there. Sometimes they're dedicated just to profit and loss information, or maybe they're just dedicated to helping you do your invoicing. So take a look at some of those. If you haven't been using a computer system, And, you know, now is a good time to think about, is that something you might want to do next year? The computerized systems, too, are cloud-based. And again, we've got products like Xero, QuickBooks Online, I think Waves Online, and Sage, I think Sage 1 it's called, is online. And those are cloud-based systems. And the good thing about those is we can have access to your books. It doesn't mean we have access to writing checks or paying bills or some of those things without your permission, but it means if you're recording your transactions, we can log into your account without you coming into the office, bringing in some kind of a backup CD or a flash drive or something like that. So it's cloud-based systems are coming into prominence right now, and it's really a good way to get your accounting done. I might mention again for people who might be coming into this late, if you just want to text us briefly what type of business you're in, that'll help me direct some of my comments.
Phyllis, we do have someone who is a small one-person consultant who has texted in.
Okay, good. So getting started for your 2017 taxes. Again, just gather your books and records. If you've got a stack of invoices on your desk that you really dread sorting, or if you've got some outstanding bills, or if you've got other types of bills that you haven't taken time to file, just go ahead and start organizing those and make sure sometimes we have clients that pay their bills and they just keep things in some kind of a file on their desktop, so they have an online record-keeping system. Others like a lot of file folders. Some actually have vendors by date. Say if you're paying monthly rent, or if you've got utilities or certain vendors you work with, those are folders. So all of that is just a good way to organize your record keeping. If you've acquired any equipment during the year, you should make sure that you have some invoices for those type of equipment. Usually those are maybe $300 to $500. The depreciation rules right now are fairly liberal for deducting 100% of any equipment that you buy for your business, or furnishings, anything that's more a long-term type asset. So take a look at invoices for those things. Maybe sometimes accountants ask for that. It's like if you bought a new car, we like to look at that sales order. That's a real big purchase, but there may be other ones too. And you might keep those in a separate file because those things are probably going to be depreciated by your accountant. If you have a lot of mileage that you keep track of, make sure your mileage logs are up to date, and we're going to talk about that a little bit more later too. And then just a hint for you, if you've got some supplies that you're going to be needing in the future months, within 3 to 6 months, or even in January, this is a good time to go ahead and stock up on your supplies before the year ends. And again, you can deduct them now in 2017 instead of when you may start using them in 2018. And then a little note on this particular slide is to just avoid the rush. Set a date to meet with your tax preparers. We have people already calling us to set appointments. One thing, it stops them from procrastinating, and two, it kind of gives them a deadline and us to know that work is coming in, and we want to get their accounting and their tax returns prepared on time. Here's just a little note for you if you're saying, well, what do I really need? Maybe it's the first year you've been in business, or maybe you've been at it a while, but having a checklist. One thing that we really have to have from our accounting clients is we have to make sure their bank accounts are reconciled, whether you have 1, 2, 3, or 4, and that your credit card transactions are all properly recorded. The key thing here really is bank recs, though. Make sure those are done. If you don't know how to do those, or if you just kind of are a little lost on that, there's always bookkeeping help of bookkeepers available, and we have some bookkeepers working with us that can help you get those records completed. If you are ever audited by the IRS, state of Minnesota, could be sales tax, could be a variety of items, rather than just income tax. If you're audited, about the first thing they ask for is copies of your bank statements. Now, in the past, that used to be a problem because typically an audit occurs maybe 2 to 3 years after you've completed your tax returns. And sometimes those bank records were hard to retrieve. So make sure you're downloading, if you're downloading your bank statements from your banks, make sure if you're storing those online, have them in a place that you can easily find later on, or some kind of a backup so that you're not losing those records, because it's very time consuming to get bank records, once you're past the year. So just make sure you got those bank statements where you can get them, and credit card transactions also. Other accounts you might think about reconciling is a year-end inventory account if you're selling products, accounts receivable if you have outstanding receivables, people owe you some money. If you owe bills to other people on the other side, you might want to make sure those are recorded. Make sure loans are updated with payments posted and interest statements and year-end statements regarding loans. It could be equipment loans, furniture loans, again, back to credit cards, lines of credit, that type of thing. If you have employees and are doing payroll, make sure that all those records are in order too. And we'll go into W-2 and the filing requirements a little bit later tonight, or this morning, excuse me. I'm doing seminars a lot these days. And then equipment and furniture and furnishings, again, if you've got anything that's in doubt as to whether you would call that equipment or just office supplies, talk with your accountant about that. And then just a reminder, a little start item here, before year end, back up your computer systems, keep things in a permanent place. This might be the time when you want to back up to a flash drive and keep that with your records, or back up to a cloud-based system. I work again with many small companies, and there's nothing worse than when they come in and say, I lost all my books, somebody stole my laptop. It's just really difficult to retrieve those records, and we kind of start over, and or if their computer crashes or anything happens, to that equipment, that's really a vital part of your business. So make sure you're taking a lot of care with your computer systems. We may have some home office people with us today. And if you are working from your home or apartment, deducting some of those expenses, it's a legitimate expense. A lot of people have heard it's very difficult to run an office in the home, or maybe they're afraid they're going to be audited if they, claim office in the home expenses. But again, it's a legitimate expense. If you're working out of your home rather than renting an office space, which you'd get to deduct, you can take a portion of your home expenses that you couldn't deduct otherwise, and you can deduct those on your tax returns. And those, again, you need to know the square footage. If you work with a tax professional, they'll say, well, what's the square footage of your dedicated office space, versus the total square footage of your home. So, be prepared for those kinds of questions. Another one that comes up sometimes is when we have people in construction companies or a construction type business, and they're using their garages. Or in some cases, I've had people that have used their entire basement of their home to store their inventory. It's nice and dry ordinarily, and it's safe. And then we have other people, roofing contractors, or people in construction. They're storing lumber or that type of thing in their garage. So we look at how much of the square footage are they using on that, and what kind of maintenance is it. Occasionally, too, if you're starting a home-based business, you might want to, get some new furnishings for that so that you really make it like an office. and those type of expenses are deductible for a home office. And just a reminder, this has to be dedicated space. It can't be your kitchen table, and it can't be your dining room table, which is what mine becomes once in a while, but I don't deduct that. So it's just usually these dedicated spaces that you're using for storage and/or your office record keeping.
One question, Phyllis. If you were storing supplies in your garage, would it have to be the entire garage dedicated, or could it be a portion?
It can be a portion, but again, that's a little harder to spell out. Many people just do have, some dedicated space that's, half of the garage or something. Usually when we're deducting garages or off-site storage, or it could be the big shed in the backyard, I always tell people, please take a picture of what you're doing there. Take a picture of your home office. Take a picture of your garage. How much are you using of that space? Do you have a 3-car garage? Do you have a single-car garage that you never park the car in? So pictures are substantiation, again, for some of those expenses that you might use.
Phyllis, Tricia has a question. If we were to deduct home office space, does that affect home resale in any way?
Home resale in any way? The only thing that affects is if in the future, if you sell the home, you have to, we call it claim back the depreciation. Actually, depreciation is a very small amount ordinarily, because you have to deduct the depreciation over 39 years, the same as commercial property. So unless you're living in $1 million home or something like that, the depreciation is very little, and it's a small part. There's another option to that is you can take the square footage, and there's just a straight flat out per month amount or a per square foot amount you can take for home office without keeping track of all the utilities and the trash removal and electricity and heat and that type of thing that's generated for that space. So that's an option. We have 2 options. It's just the expenses allocated for your home office usage, or a square footage that can be used too. Fixed assets, again, we accountants like to use those terms because those are depreciable items, and it's equipment, computers, furniture, items with a life of over a year. And we have rules on depreciation which allows you to expense up to, excuse me, right now it's $500,000 a year. So if you spend over that, there's some other rules that apply. And in the rules that's before Congress right now, they're really looking at just allowing businesses to deduct 100% of the equipment that they buy during the year and not have that limitation. Personally, I'm not real fond of that idea because that equipment will be used over a period of time, and its use depreciation offsets future income. So we always look at that. Do you want to depreciate the whole thing now, or should we allocate this out over a period of years? I worked with some people who are coffee roasters and helping them set up their accounting systems, and their equipment, a roaster was $200,000 to $250,000. And if we write that off in 1 year and they use that roaster to make income the next year, well, they don't have any depreciation left. So that's kind of a thing that you have to kind of weigh the tax and non-tax reasons to do things. Cash basis, you can pay for items that you need on a credit card and deduct it. If you're thinking of buying a new laptop or some kind of special equipment, going to sale terminals or something, you could do it before the end of the year. And then when I say take advantage of Section 179, that's that special allowance to depreciate. Do a quick write-off on equipment. Where I'm at here. Again, on vehicles and mileage, if you're audited by the IRS and they question your mileage, they will ask for contemporaneous mileage logs. That means you should be keeping track in a notebook or maybe some kind of something on your smartphone, some way that you could have some kind of a mileage log about what you're actually, doing for mileage. One thing I recommend is if you've got a company car, get your oil changed. And they always write down 1, the date, 2, the mileage, and 3, when you should come back. But that would be written substantiation from an outside party. And on the vehicles, there's a couple things here. If you're owning or leasing a car, you do have to add personal. You can't deduct 100% of the car unless it's used 100% of the time. I have some landscaping clients, and they use their trucks 100% of the time. They really don't use it to run around town or run down to Cub and get some groceries. One, it's usually piled full of stuff. But the other thing is it's just not something that they would ordinarily use for personal use. So those are, but if you're using a vehicle and you're in sales, for instance, and you're calling on a lot of customers, just make sure you're keeping track of your mileage. And the mileage for this year, for 2017, I think it dropped a little bit from last year, but it's been fluctuating. But actually, about 50 cents a mile is really a pretty sizable deduction. If you're driving 5,000 miles a year, that's a $2,500 deduction. So it's substantial. The mileage, the cents per mile, is supposed to cover depreciation on a car, your oil changes, all of the actual expenses, gas. So you don't have to keep track of any of that. You have an option. You can take the actual expenses and allocate them to personal and business use, or you can take the mileage. Most of the clients I really work with like to use the mileage, especially people in sales or, again, some of our construction people. I have doctors, too, that go from place to place, so they come into that, too. Tax reporting for W-2s. Some of you may not have employees at this time. And in the past, but if you did have employees, you kind of said, well, I got to get my W-2s out to my employees by January 31st. So we always have had that deadline, get that information to your employees so they can get their own returns done. Now, there's been changes in when you send those records to Social Security. In the past, you were given about an extra month. You didn't have to file those till late February, and sometimes if you were electronically filing, you didn't have to file them until March. What's happened with all the fraud that's happening right now, the IRS doesn't even start processing returns as soon as they used to, because people would just make up W-2s and go in to a tax preparer, not me, obviously, but at any rate, they would, or they do their own, they just do their taxes online and have a W-2 and kind of make up some information. The IRS would never come back and even check that for a period of months with this old paper trailing. So what they're doing right now, they really require you to get those W-2s over to Social Security Administration. The IRS wants to get that into their records as soon as they can so that they can start doing matching on the individual tax returns to W-2s. So again, they're pretty adamant about that due date. Make sure you're filing those W-2s with Social Security by the end of January. A lot of people went ahead anyway, but there were times when I liked to have that extra month, because if we were helping somebody with payroll that had 90 clients, some of the employees had left, or they had 90 employees. Some of the employees had left or moved, and the W-2s were returned, so they had to track them down and get an address. Occasionally, there might be an error on a Social Security number, so it gave you a month to get everything. It was mailed to the employees, or they received those. They looked things over. If there was an error, you could have, it gave you a little bit of time to correct that W-2 before you submitted your W-2 to Social Security. So when you're filing this year, because they're going to Social Security right away, try to get your W-2s out early, like the 15th or 20th, so your employees can look at those and make sure that information is accurate. And the same thing goes if you're filing 1099s for miscellaneous employees. Make sure that those are all taken care of and filed by that January 31st deadline.
Phyllis, if you miss those deadlines, are there fines, or what are the repercussions?
Usually there's some kind of a late filing penalty. I think because this is probably a first year and some people may miss that, it just depends on if we've got somebody probably hand typing 3 or 4 W-2s for their employees, and, you know, maybe they take copies of those into their CPA or tax accountant, you know, when they get their taxes done, their business taxes done. You know, those would probably be the ones that might not know about the deadline.
Mhm.
It's out there on, all this information's on the IRS website. They're trying to get the communication out there to people, so it's, that information is available, but again, it's not talked about in the newspapers a lot, so we really want you to be aware of that. Tax return due dates for 2017. Again, for sole proprietors, it's due April 17th. The 15th falls on a weekend, and the 16th in Washington, D.C. Is like a special holiday for federal employees, so they're closed. So the due date is moved up to April 17th for the 2017 returns. C corporations, calendar years are due April 17th. S corporations, March 15th, and partnerships, March 15th. So they've changed the due dates around slightly in the last couple years to match up with the individual returns. I'm a little bit conscious about my time deadline here. I'm going to go ahead, I'm going to come back and talk about fraud a little bit because it's such a big part of what is happening right now. See if I can find my slide in here. I had a slide on 2018 tax rate. Let me just find that. Sorry, you guys, but let me see. Okay, well, that seems. I'm going to mention this, and it might be in the slide someplace here, but let me see. Oh, I wanted to talk about what's ahead for 2018, and that the standard mileage rate is up to 54.5 cents per mile. For those of you that's concerned about the Social Security maximum, that went up a little bit this year to $128,700, and after that point you wouldn't be paying on Social Security a tax. We've got a major tax overhaul sitting in Congress right now. As of today, they still haven't finalized anything unless they do something by noon. There's a lot of different things that have been talked about that affect businesses. One is that the corporate tax rates are going down. So if you have a C corporation, those taxes are going down to, I think 22% is probably where they're going to hit that point. They've suggested 20%, but I think they might keep it at 22%. And so that will be a boon for some of the smaller businesses, and they'll give them, in lieu of having corporate income tax, they'll have some more cash on hand to pay employees, hire more employees, buy equipment to expand their business. The one thing they're throwing around is they're going to disallow any deduction for business entertainment. That was in the proposal. I don't know if that is still going on, but it could be. That might be one that's going through. For those of you that might have an S corporation, they're talking about how they're going to tax pass-through entities. So if you're in any of those situations, talk to your tax accountant about 2018 when you go in to get your 2017 taxes done, because that will definitely, affect your future, your business. I might also mention one thing, and I don't have this in the slide. Currently, there's audits that really do happen in the lines of sales tax. And I know many of you may be selling remotely, selling online, and the states are always looking for ways to raise revenue. And if you're buying online and or if you're selling online and you're not collecting sales tax, and it's possible that you might have to be collecting sales tax for a state, you should be aware of that. And either one, talk to people in that state or find out about the laws. There is a recent law that passed in South Dakota that they're going to require sales tax be collected from your customers if you have over $200,000 worth of sales in South Dakota and or 200 transactions. So if you're selling jewelry online and your Aunt Millie has a big party out in South Dakota and gets a whole bunch of orders, if you go over 200 orders, you'd be liable for sales tax in South Dakota. And those can be substantial taxes. If you don't collect it and you're audited, then you're going to have to pay that sales tax out of your pocket. So I want you to be aware again, if you're doing the remote selling or if you're working out of state or going to other states for craft fairs or something like that, make sure you're aware of the sales tax rules. Find out where I was again. Sorry about that disruption. This is an area that I wanted to talk about briefly. I talked about it last year, but it's still out there. And right now we do have lots of cyber fraud going on. For people that have employees, it can be a trusted employee, somebody that's worked for you for 10 or 15 years or 2 years. Somebody, it could be a family member, you don't know. Corruption, collusion, sometimes two employees get together and work out a scheme. There's workers' compensation fraud, people claim they're injured and they're not, and that costs you money and the company. Check tampering. So this is just a few of the ways that, fraud comes into a small business without you even being aware of it. I always recommend to our business owners that open the bank accounts, even if as your business grows and you got other people, handling your affairs, at least open up your bank accounts. Make sure those are, look at those. Do those look like valid transactions? And this is just a recent IRS tip from the IRS. Again, they've got some good information out there. And we think, well, I'm a small business. They're probably not going to come after me or whatever. But, if they have your information, one, there may be reasons they could file a fake tax return for your business as well as you personally, or they could apply for a credit card in your business name. The people that run these fraudulent cyber-type activities are very sophisticated. They know how to get into tax information through a lot of different ways. There's been lots and lots and lots of fraudulent tax returns filed the last few years. The IRS tries to catch some of them, but it's just not always possible to do that. Other things that happen is you might get a letter from the IRS, and it looks like it's from the IRS, sounds like it's from the IRS. And please have your accountant look at that, because they are copying their logos, they're copying all their symbols, they're using their web, and they're using website tracking. It looks like legitimate IRS, and it's not. So don't be frightened by a letter from the IRS if it's relating to something that, is in your business. You say, hey, this isn't something that ever happens to me. Then you better do some follow-up on that. And if you call the IRS, it might even be a fraudulent phone number. You might be talking to one of the crooks, so to speak. There's going to be some new procedures to protect businesses. So when you're getting your tax returns done, they might ask for more information than you've had to give in the past. So, be prepared to answer some of these additional questions. It's part of proper tax filing. Here's just a few more tips for you on, protecting your business. Protect your credit cards and bank accounts. It's easy to leave a credit card behind, if you're in a hurry and you leave it at a restaurant or it just drops out of your billfold or something like that. So do keep some kind of a listing of the credit cards on your person or in your car. And then if those are ever missing or something, so that you can, identify those right away and get back to your credit card companies. And same thing for your bank accounts, have those written down in a secure place where you can get to them right away if somebody would ever get into your bank accounts, and it does happen sometimes. There's some out there that are called like malware, and those are ones, and they kind of hold you hostage. They run a virus through your machines. It's easy for them to do. Many times they send you some kind of a link within their email, and you click on that link, and it really looks like it's from some legitimate company, and it isn't. And they immediately can start. They basically rename all of your files. And the way they get their money is they'll say, hey, well, we haven't really destroyed your files. We've just renamed everything. And they take a long string of about 13 numbers and may rename. I've seen this in action, so I know what happens. Clients have been attacked. And usually, a small amount to get them to reinstate all those files is $600, and I've seen it as high as $45,000 or $50,000. I read about a hospital whose system was compromised in California, and they literally they just renamed a lot of files, so it was, they just had to do that. They had to get back all that patient's information. So that's what happens. Have a password policy. And educate your staff, because if you read about something that's happening, tell them, say, listen, I just read about this. This is how they're attacking business. This is the hot thing that's going on. And consider employee background checks to make sure that, people have a good record that you're hiring. One thing that I used to see years ago, I don't see quite so much anymore, but you would have these big manual check registers. And what happened is they will hire a new employee and everything goes along for a while, everything's looking good. And then somebody notices that there's checks written on the bank account that really doesn't look like anything that they wrote. And what used to happen with some of these employees is they would tear out checks in the back of the checkbook. So they could forge the owner's name. By that time they had access to other information, and so they would write checks to themselves, cash them, give them to a friend, and by the time that was found out, either the employees were long gone, or when they were confronted, unfortunately in many of these cases, those employers did not prosecute, and the people just go on to do it someplace else. And, make sure you've got proper insurance on your business. You've got, if you're investing in computers and furnishings and a vehicle, make sure that you've got your business insured properly. And I mentioned here, this advice is just some basic stuff on the Small Business Administration's website. Do we have any questions at this time, Joe?
Nothing that I'm seeing right now, Phyllis.
Okay.
We've got about 15 minutes left, so feel free to text, chat in your questions.
Again, here's just some ideas on some of this fraud, that's going on currently now is, IRS impersonation. I think we got one at home the other night, and I just said, get real, and hung up. But, they don't know who they're calling when they're on the phone, so they just, will call, and they're very good. They're very good at it. They have American accents, and they use American names, and with this, increase in email, it's out there. Here's one scam they use, is like updating your IRS e-filing. You're never going to get an email from the IRS. You're probably never going to get an email from Minnesota Revenue unless you've got an open case with them. And again, they're using look-alike forms, and the IRS employs a lot of FBI agents to track down these people, but they're not, they can't be successful in everything they do, so that becomes the problem. Again, back to what are we doing for the end of the year? Get caught up on your record keeping. Try to get an appointment with your tax preparer as soon as you can. The sooner the better, because things get all crunched into a short period of time, and it's difficult for us to do our work when we have clients that bring their records in late. Back up all your data. Back up your contact database too. Make sure you got good backups on all that computer equipment. You might even take a look at some of your equipment. Is it getting older? Is it in need of replacement? At what point do you buy new monitors? At what point do you buy new scanners? I'll mention one thing about scanners, because I shouldn't say it's a pet peeve of mine right now, but it can be a pet peeve. Because right now we are sending a lot of our files, and we are exchanging a lot of our information with our business owners, and or whether they're business owners and or individuals or nonprofits. We share a lot of information using secure systems, and usually that requires that somebody open up and look at those documents. And you make sure that you've got some really good equipment you're working with if you're running a small business or a home-based business. Have good copiers. Have a good printer. Have a good scanner. We are using secure means. We send a secure link to our clients, and we'll say, here's a document for you to print and sign, or here's something for you to electronically sign and return to us. It helps process in the returns and the accounting. So again, make sure you've really got good equipment in your home office, in your small business, because we're using it more and more in ways of saving people money with our time, making sure that we're getting everything done efficiently. So have a good printer, have a good scanner, good computers, keep all that up to date, and be knowledgeable about your business. Take a little bit of a look for 2018. Did you achieve all your goals in 17? And what's ahead for 2018? So, lots of tax changes coming up. Keep aware of those. I see there's an article in the Star and Tribune today. It was pretty interesting about comments from some small business owners. Certainly the news are talking about these tax changes that's coming up, so be aware of those. They affect a lot of individuals more than the business owners, but you as a business owner is going to file an individual tax return, so it affects your overall financial status. So again, I think that's about it for me. If we don't have any questions, Jill, we're finishing maybe a little bit earlier, but...
Okay, well, we'll give a few minutes for questions. I'd just like to let you know that MetroIBA has a few upcoming events. Our networking event in January has been moved from our first Tuesday to the second Tuesday. Nobody wants to come meet on January 2nd, so on January 9th, we'll meet over at Groundswell in St. Paul for our networking event. That's 4:30 to 6:30. And just a heads up, Groundswell has their trivia night starting at 7, so you might want to plan on staying for that. And then our, let's see, in February we'll be over to the Electric Fetus, and that will be the first Tuesday of the month for our networking event. We have a question from Kathy. Any ideas regarding a business that's thinking about transforming to a social enterprise or a B Corp?
I don't have any at this time. I'm not working with any B Corps right now. I know that MetroIBA has some members that are B Corps. I guess I'd like to say I don't really have any comments on that right now. I think it's something you should talk about with your tax preparer or CPA. I'd be glad to talk with you about it. I just haven't had a lot of inquiries in that area in the past. But it's something that if you're considering, make sure you get some professional advice on that.
Is there a top one or two mistakes that small business owners commonly make or miss in maximizing their deductions?
I think the only thing I run into is when they're starting to do estimates. They'll say, well, I think my mileage was about 2,500 miles last year. And ordinarily, when they go back and really look at those things, they usually come up with more.
Okay.
So mileage is one, mileage and travel. The other thing sometimes is just maybe not being aware of everything that they really can deduct. And again, it's something they need to talk to us about if there's some question. One thing that sometimes is a deductible item is travel and or lodging related to conferences. And you can certainly take some personal time if you go to a conference, and you can pay your round trip airfare and your hotel during your conference, and then after that, if you want to take a couple, 3 days and, you know, tour Orlando or something like that, you can certainly do that. So it's a way for you to deduct some business expense, but it combine a little bit of personal time in there too. So I talk to people about that once in a while. Have you taken any business trips this year? And sometimes they miss that. I think the other thing that, you know, keep in mind is probably this home office. The home office deduction, if there's any time you're using your home, whether you're incorporated or not, are you just using do you have a separate line for, you know, a home phone line that you just use for business? Cell phones are certainly deductible, and internet services, that type of thing that you may have to pay for at home to have access to your business, for your business, as long as you're not really using it for personal reasons.
So would your malware software be deductible?
Yes. Yes.
Oh, that's good to know.
Yeah, anything that you are using to protect your business or make sure that your business is secure is a deductible item. The rationale behind deductions is deductions should be used to increase your income. So sometimes companies will say, well, I'll take that, it's a good write-off for me, and I go, well, what are you going to use it for? Well, I don't know, I thought we'd do this or that. I said, well, really have a plan, and then buy that piece of equipment, because I occasionally have people that will think they're going to do something, and then it doesn't happen.
Mm-hmm.
So they may deduct it, they may have future plans for it, but again, it's some kind of more of a cash flow planning tool.
Okay.
You know, you want to kind of match your cash flow with your income on that too.
Well, great. And Phyllis has her contact information.
I got
question.
I see one more question here. Why does the IRS require the use of a home office deduction? You don't have to. It's optional. It just asks, you know, it's optional. Most people take it because typically they can deduct such things as a part of their utilities, and that would be lights and heat. Trash removal, it seems like we have a lot of paper that accumulates from my home office. I don't take home office deductions because they're fairly minimal, and I have a professional office. But it's not required. It's an option, and again, some people don't particularly see there's much advantage, and so it's something you probably, it's just more of a deduction to offset some taxable income. And then I think too, for Schedule C people, when you're paying your Social Security tax based on your net income from your business, home office expense offsets some of that Social Security tax that you pay in, and that can be quite a chunk of money. So that's one reason to encourage people to take that home office deduction. And I don't see any more questions at this time. My information's on the last slide. If you have any questions, send me an email. I'll be glad to give you some advice, and certainly good luck in your businesses in this coming year. And I think our economy's good right now. We got lots of things going on. It's real positive. Don't watch the bad news all the time. Do they ever have good news? But stay in there, close with your business, and have a good end of the year.
Thank you, everyone. Just want to let you know, if you have questions or comments about webinars you'd like to hear in the future, please give us an email at info@metroiba.org. We're happy to take your suggestions, and if you have speaker suggestions or if you would like to present, please just let us know. We're always looking for more. MetroIBA offers these webinars to both members and non-members. They're open to everybody. So if you're not already a member, you might want to take a look at metroiba.org/membership and learn more about the benefits of membership and what you can get from being a part of MetroIBA. And with that, I'd really like to thank Phyllis for taking time this morning, and poor Margaret for hosting us at Venture Academy. We appreciate your time, and have a wonderful holiday. Thanks. Bye.